Welcome back to Explain the Charts, everyone. Today, August 4th, 2025, the market is buzzing with activity, and QQQ, the Nasdaq 100 ETF, is certainly at the center of attention. Let's kick things off by looking at the broader market sentiment and recent news impacting the Nasdaq. Just a few days ago, on Friday, the Nasdaq experienced its most significant one-day decline since April 21st. This sharp sell-off was largely attributed to a worse-than-expected July jobs report, signaling potential economic weakness. Adding to the concerns, President Trump's recent tariffs and ongoing trade deal discussions continue to cast a shadow over global markets, contributing to the overall volatility. However, as we speak, futures for the Dow, S&P 500, and Nasdaq are climbing, indicating a potential rebound as Wall Street attempts to recover from that post-jobs report slump. It's crucial to understand that while this positive news about futures is breaking today, August 4th, our historical daily chart data for QQQ extends only up to August 1st. This means the full impact of today's recovery won't be visible in the complete daily candle data we're about to analyze, but it certainly sets the tone for current sentiment. Now, let's turn our attention to the one-day chart for QQQ to get a clearer picture of the longer-term trends and the recent downturn. Looking at the data from March 2024 through mid-July 2025, QQQ demonstrated a consistent and robust uptrend, climbing from the mid-400s to highs above 570. This strong bullish momentum was a defining characteristic of the Nasdaq's performance for well over a year. However, the landscape shifted dramatically around late July, culminating in the significant drops on July 31st and particularly on August 1st. The candle for August 1st, reflecting Friday's sell-off, shows a substantial decrease, opening around 574 and closing near 565, confirming the market's negative reaction to the jobs report. This sharp move effectively broke below what had been a critical support level around the 565 to 567 range, which QQQ had previously tested and bounced from multiple times in mid-July. The subsequent candle for August 2nd, not explicitly mentioned in today's news but present in our data, continued this bearish momentum, closing at 553.88 with high volume. This level, around 550 to 552, now acts as the immediate key support for QQQ, having served as a pivot point in early July as well. The high volume accompanying these recent down moves suggests strong conviction from sellers, which is a bearish signal. On the upside, the previous resistance now stands around the 570 to 572 mark, which represents the recent peak before the decline. To truly grasp the intensity of this recent sell-off, let's zoom in on the 15-minute chart, specifically focusing on the period from July 30th through August 1st. Here, we can observe the intraday dynamics that led to the daily candle's significant drop. Notice how on July 30th, after a brief attempt at recovery, the price started to show signs of weakness, with candles closing lower and increasing selling pressure. The real acceleration of the sell-off is evident as we move into August 1st, where QQQ opened around 562.78 and quickly plunged to a low of 551.68 within just a few hours. This rapid descent clearly illustrates the panic and aggressive selling that followed the economic news. The corresponding spikes in volume on these bearish 15-minute candles further underscore the strength of the selling pressure during this period. This detailed view confirms that the breakdown wasn't gradual, but a sharp, event-driven decline. Short-term traders would have been looking for breakdowns of intraday support levels, such as the 565 mark, which was quickly sliced through. Conversely, those looking to buy the dip would have watched for exhaustion of selling pressure and signs of reversal around the 550 to 552 area on these smaller time frames. Considering both the news and the chart data, let's discuss the reasons to be bullish or bearish on QQQ, both short and long term. In the short term, reasons to be bearish include the recent break below key support levels, the significant volume accompanying the sell-off, and the underlying fundamental concerns from the jobs report and ongoing trade tensions. If the 550 to 552 support level fails to hold, we could see further downside, potentially retesting the 490 to 500 zone seen in May and June 2024. However, there are also reasons for a cautious bullish outlook in the short term, primarily driven by today's news of climbing futures. This suggests that the market might be oversold and due for a technical bounce, especially if the 550 to 552 level proves to be strong support. A successful bounce from here, coupled with improving economic sentiment or positive trade developments, could pave the way for a retest of the broken 565 to 567 resistance. For the long term, QQQ has historically shown strong growth, powered by innovative technology and growth companies. Recent news like Nasdaq's partnership with AWS to enhance liquidity and facilitate capital flows points to continued innovation and infrastructure improvements. This long-term fundamental strength could underpin future rallies, making significant dips potential buying opportunities for patient investors. A longer-term bullish stance would rely on the market absorbing current economic headwinds and a return to tech-driven growth. Recapping the important price levels to watch, QQQ is currently sitting precariously near the 550 to 552 support zone. A sustained break below 550 would likely open the path to the 490 to 500 level, representing a more significant retracement. Conversely, immediate resistance stands at 565 to 567, a level that was recently strong support. Beyond that, the previous highs around 570 to 572 would be the next target if bullish momentum returns. For unbiased predictions, a bounce from 550 to 552 back towards 565 is moderately likely, around 60% chance. If today's positive future sentiment translates into actual buying pressure and no further negative economic surprises emerge. However, a deeper correction towards 490 to 500 is also plausible, around 40% chance, if the jobs data continues to indicate a weakening economy or if new tariffs further escalate trade tensions. To reinforce the likelihood of a bounce, look for positive daily candle closes above 555 with increasing volume, forming a clear reversal pattern on the daily or hourly charts. Conversely, continued low closes below 550 on high volume would signal a reinforcement of bearish conditions. Moving forward, keep a close eye on upcoming economic reports, particularly inflation data and subsequent Federal Reserve comments, as these will heavily influence market direction. Also, watch for any updates on trade negotiations and the performance of key tech companies within the Nasdaq 100. These factors will be crucial in determining QQQ's trajectory in the weeks and months ahead.